Hi, I'm Patu from freefincal. So the market crash in March 2020 destroyed all the gains from my equity mutual fund portfolio accrued over nearly 12 years. But this is the time to invest more into equity and not run away from it. So this is a follow-up to my video on how after 12 years my annualized return on the equity mutual fund portfolio dropped from 11.6% to in 11.6% in December 2019 to 2.75% just a few days ago, that is after the crash in early May or so. There were several questions in response to that video and the post, so I thought I will make another video in which I show additional data and so on. So, but I want to make it clear that some people reacted as usual. People react in extremes often, and they said, "Oh, this is what happens with equity. You should not invest in mutual funds and so on." That is not my intention. My intention has always been to point out, stop investing in equity without any plan in the hope that everything will become all right in the future. Have a plan and then it will be okay. In my case, please recognize my technical retirement is still about 19 years away, and therefore I can afford to take on this kind of a loss. And I have also made it clear my financial independence status has not been affected by this crash, and it's really not a problem if you know which kind of metric you have to focus on too. And one more thing, one more doubt is that people said something is wrong in the calculation. I don't think there's anything wrong in the calculation. You will see the gains and then you will note. Also, some people said I have not taken into account rebalancing. The point is that it has been such a difficult task for me to keep pace with my ever-growing NPS contributions, because every time that the government announces a DA, there is a pay commission, there's a promotion, there's an increment, the NPS contribution keeps increasing every year like a step-up SIP, and it has been very difficult for me to keep the NPS contribution and my meager PPF contribution to 40% of the portfolio and have the equity contribution up to 60%. I've always been struggling for all these 12 years, and for the last a few years, I've been able to keep the equity allocation above 55%, that is 58, 59% on so, and then because of this crash it has now fallen down. Now it is currently about 53, 54% because of additional investments I did and the market gains since March 23rd and so on and so on. So I have not done any kind of rebalancing so far on the in the retirement portfolio. If I switch a fund, I will just take the money and put it completely into the new one. So what I wish, okay, let me first show you the full data. So this is the growth of the retirement corpus. The red line is an imaginary investment in the Nifty. That is, I have taken the amounts that I have invested over the past. I have something like 440 mutual fund transactions over the past 12 years. I've taken all the amounts, the purchases, the redemptions, and I've assumed that they would be invested into the Nifty 50 index. The expense ratio has not been included, so it might affect the red line a little bit. The blue line is my actual portfolio. The black is my total investment, and that's how the whole evolution has looked like. And notice that this much profit I was sitting on a very decent amount of absolute gain, and that absolute gain almost vanished. It fell to almost 6% during the crash, but it has now moved up, and my current absolute gain is about 22%. But still the annualized return is quite low because of because it's annualized, takes into account the time factor and so on. Now, if you have a look at the close-up of the graph towards if you're focusing on the current market crash, well, I don't want to read too much into it, but my portfolio has managed to fall less than the Nifty, which is, if you see, the Nifty index actually went below the total investment. So the crash essentially made the absolute gain negative, and then my portfolio has been able to recover reasonably well. So for those who don't know, the main three funds are HDFC Hybrid Equity, PPFAS, and Quantum Long Term Equity. So these are my only three funds that I use for retirement. It's fairly low volatile portfolio. That's what I want at my age and so on. If you're younger, you may want to take on more risk. Now, what is probably more insightful is the absolute gain at any point in time of the portfolio. The blue is the portfolio, the red is the imaginary investment. So these are the absolute gains or losses. Something that I keep saying for the first 5 years of investment, you can see that the gains were basically, it fell down to zero, and this huge drop, that's part of the 2008 crash, but then the amount I was investing was like peanuts, so it's not a big deal. So don't worry about this. So notice that the gains fell to zero after 5 years, then it became stellar 60% gains, then it became all the way down to 10%, 20%, then it became all the more 80%. That was the peak gain, 80%, and then it fell down gradually to 40, 50%, and then the crash eliminated most of it. It became about 6%, and now it's back on to about 22% in the next few days. So my point is, for my goal, for my situation, I don't have a problem with this loss or whatever meager gains or meager annualized return. It doesn't matter. My point is, it's going to go up again, and when it goes up, there'll probably be some kind of sideways movement, like this kind of a very very meager gains. That's the time to push in more equity, push in more capital, and then when it goes up, you're going to get a lot more benefit. So my point is not to be scared. I'm not trying to scare you. I'm trying to say this is how it's going to be. This gain and loss business will never go away from equity. All these mutual fund fellows, they all say, oh, please keep invested and stay invested in the long term. Everything will be okay in the long term. It will not be okay in the long term. Look at my portfolio. Please recognize this. I don't mind, because I have a lot more time. I have time on my side. I know how to manage it. I have asset allocation in place. I look at my portfolio in terms of what it is actually worth, and if and when the time comes, I will be rebalancing. Like I said, I'm going to wait for the equity allocation to rise up to 60% above, and then I'm going to book some profit and make it 50-50 and remain there for some time to come. So you should have a plan. So if you don't have a plan, then you're going to be disappointed. You're going to basically leave the fortunes of your retirement corpus basically down to luck. And I think that's just not on. So please have a plan and invest, and that's how my portfolio has fared. So if you have any questions, comments, let me know. Take care. Bye.